Gurmeet Chadha joins us now. Hello Ji, long time. You've been coming on the channel, but I've been missing interacting with you on the channel. Let me put it this way.
Always the power.
Would you buy Nestle? I mean, reminds me of the controversy. The news was not big, but the stock fell. The news on Nestle sugar products is not something which is going to change their sales dramatically. We all know that there is sugar in cola. We all know there is sugar in mithai. We all know there is sugar in a milkshake. I'm not even getting into how much sugar is there in a typical cold coffee or a coffee which you drink. But that does not stop us.
So I think even without the sugar news, wouldn't have probably bought Nestle. You will not buy even these markets when interest rates are still high. 10-year rate in US is 4.6. Our 10-year yield is above 7. I mean, it's not a great idea to buy 70, 80 only multiple stocks on a trailing basis and 55, 60 times on a forward basis where top line growth is in single digit. I think last quarter they had a huge jump in gross margins to almost 400 bips on product mix and soft material cost. And good, this issue is not just confined to sugar, but differentiation between what you do in a developed market and what you do in a emerging market. To me, that is more to do with how you believe how a market has to be addressed rather than, so I think better options, in some of the Indian companies have done well. Tata Consumer. We are actually going level 2 now. So government has made RPET mandatory up to 30%. So all your bottles and packaging, food packaging need to have recycled content up to 30%. And the deadline starts next year. And then after that, there is penalty. So there's a very limited company for doing that. So one company we like is Ecosphere, which is into RPET. It also does RSPF for textiles. We are seeing that recycled material being used in textiles also. So something which is a good ESG play, a very small company, reasonable market valuation. That is something we are adding. And we will look at some of the other names, including Marico, including Godrej Consumer, where there has been a change in leadership. So we like those names. And I also like QSR, not really related to this space, but you're right now getting the entire QSR space at 60,000 crore market cap, which is let's say even less than that of Cipla. I think this space is only going to do well.
No, I heard Tata Consumer, Godrej Consumer, which is the other small company, we completely missed it.
Ganesha Ecosphere, it's into basically RPET. They supply, they're into recycling PET. RPET is supply, basically waste management. It's the recycle waste. They have a 20% market share, and that's being used for food packaging, PET bottles. So Coke, Pepsi, Varun Beverages, everyone, Dabur, everything is done through that. And government has made a guideline that the content you use for PET, 30% has to be recycled content. And there's not enough capacities right now except this company. So that's a proxy play to FMCG and food consumption coming through, bit of recycling, which is ESG play, and the food packaging.
Okay, so that's an interesting name that Gurmeet has fished out for us. But hold that thought, Gurmeet. Let's take it across to my colleague Ansh. He's joining us to talk to us about which are the big price volume buzzers which are in action right now. Ansh.
Right, so just will be the first stock in focus. As you can see in the chart as well, the stock has a breakout from its key horizontal resistance of around 940 level, which was intact from last 3 months. The breakout was also led by volume of 50 times its average trading volume of last 20 sessions, indicating very strong participation in today's up move. Apart from this, Timken will also focus. As you can see in the chart, stock has given a breakout from its handle chart pattern, surpassing its DMA along with good volume of over 2.8 times its average trading volume of last 10 sessions. Lastly, Martin will be in focus as the stock has actually given a breakout from its consolidation of last 10 sessions, touching 2-month high level with volume of over 3 times its average trading volume of last 10 sessions. So keep an eye on the stocks.
Gone below 22,000. No, not there actually. 22,000 is intact. Nuresh, is this the Lakshya Rekha? Psychologically, 22,000, just remember this number, go below that, start selling, stay above that, start buying?
Not really. The last swing low is 21,700, 21,800. So at current levels of 21,950 to 22,000, you have a 150 pointer stop to be placed and I expect a bounce back. The reason I expect a bounce back is we've not seen similar downtick of almost 250, 300 points, 1% on the Nifty being seen in the global indices. In a geopolitical announcement area, we generally see a lot of correlation continue. Looks like some bit of selling, which is purely in our markets. So could be a contra trade here. It's only below 21,700, 21,800 where the trend changes, which is the last major swing low.
Gurmeet, so tell us a bit more about your three biggest large cap and three biggest mid cap holdings.
So I think we are adding, we're being a little counter-cyclical here, adding some ITC in large caps. We're building more to HDFC Bank after the quarter date. I think probably we are probably 1 quarter more. The deposit mobilization was pretty good. Probably we get to know once the numbers come in this week. We are adding HCL Tech. One company we believe in, large IT, which is better mix. A lot of the trends are non-discretionary, so it's IT services, it's ERD, and then they have product and platform business, which is a very high margin business that they do pretty well. And something which migrates more towards IP and not just IT services, I think direction looks good. In mid caps, we've added some market participants on corrections, including CAMS, CDSL, market infrastructure services players. We added a bit in one of the food packaging name I discussed with you. We are adding some auto ancillary names as well, like Sandhar Technology. I think this Tesla coming to India will have a very positive impact on with the localization playing out over the next 2-3 years. Let's see what the plans Tesla has. So we have Uno Minda, we have Sona BLW, we have Sandhar Technology in the portfolio, and slightly trying to nibble into mid-cap IT where there's been a large correction like KPIT Technologies.
Okay, KPIT Tech, Sandhar Technologies, Ganesh Ecosphere, these are some of the names that Gurmeet is looking at adding in the portfolio. But in the meantime, the fall in the market is getting a lot more accentuated right now. Take a look at Bank Nifty. It's below the mark 47,000. So at one point of time, just last week, we were talking about 50,000 on the Bank Nifty. It's quickly given up almost 3,000 points. And even for Nifty, the frontline index, we've lost what 8 to 900 points in a matter of 4 to 5 days. So very sharp correction is what we have in hands. The question is whether it's only temporary, whether it's just related to expiry, or is there something bigger? Because I'm taking a look at the global markets. For now, the US markets are still in the green, not by a whole lot, but there is no big pressure coming in. Even the European markets are a bit in the green, whether it's the French CAC, the UK FTSE, both of those indices are in the green right now, while DAX has just managed to flatten out a bit. We'll discuss the market mood right now in a bit, but first let me take it across and get a sense how the dealing room mood has changed. Sharad, what is the dealing room chatter like?
Well, yes, from the dealers, what we are hearing is Aarti Pharma Labs HNI has been consistent over the last 3 to 4 sessions. As to also, we are seeing a strong buying coming in. Now, the volumes itself is picked up 3 times. Its 20-day average and stock is up 17% over the last 5 trading sessions. We did a bit of channel check, and what we are gathering from our sources is that importantly, the CDMO business inquiries have picked up, and an interesting product, caffeine, that is also the company makes it as a finished goods as well, and the demand for caffeine related products, especially in the usage of cooling, has picked up, and because of that, the caffeine prices actually in the market has also picked up from almost 800 to 900 rupees per kg to almost 700 to 1200 rupees per kg as per our channel checks. Interestingly, the company is expected to deliver strong results as well, especially in the fourth quarter part. Apart from this, also the dealers have stated that there is a basket buying from certain domestic institutions in the mid-cap pharma space as well, and the institutional interest already was there in the large cap space when it comes to pharma companies.
Okay, so that's about Aarti Pharma Labs clearly holding out with a 7% gain in a market which is otherwise tumbling away. But actually, let's pull up the mid-cap and small-cap and see if the pressure is at a similar level as the frontline index. Is it largely related to large caps? No, so there's a bit of a pressure on the mid-cap and small-cap. Well, of course, not as bad as the frontline index is doing because those are down over 1%. These are holding on with cuts of around 0.2 to 0.3%. Nifty actually down 0.6%. From the highs of the day, it's down 1.25%. But waiting by for the earnings from the likes of Infosys and Bajaj Auto, let me ask you, Gurmeet, as to what are your own expectations or what are you watching out for come Infosys as well as Bajaj Auto for the IT and auto sector respectively?
I think I've been looking for the deal TCV and the guidance they gave. I think that's something market will be looking at. I think the TCS numbers were good. They got a little bit overshadowed by the Israel-Iran conflict. I think the numbers are pretty good in an environment like this. I think one feedback we are getting from a lot of headhunters and is that the IT hiring is coming back selectively, and there is some recovery also being seen in banking and some of the other verticals. So let's see. I think it will get very differentiated now. You'll have companies which are not doing too well still, and there are companies who are actually coming out it, and doing well. So I expect I think valuations have become reasonable. It has corrected again after hitting those 16 levels, especially in P. So let's see how things come up. I personally probably think HCL is more reasonably valued in large versus Infy with a better mix. But let's see. Bajaj Auto, I think because of the buyback, and I think the price probably captures a lot of positive things. I think the rural economy is a touch soft, so we don't have that in the portfolio. But as I said, I would prefer the auto ancillary route to play auto largely at these valuations because most of the OEMs, passenger car makers especially, are quite a bit.
So HCL Tech is better placed within the IT universe, and auto OEMs is the preferred place for Gurmeet at this point of time. Naresh, wanted your take regarding the city gas distribution companies. Kunal is saying that he doesn't want to make a bet either way on these names, but IGL is down almost 6%. HCL is coming under pressure. Gujarat Gas is down. Anything that you are spotting worth trade within this basket?
So it's been a tough sector to trade. So if you look at IGL, we are still at pre-COVID prices. So the stock has gone nowhere. The stock has been at this 450, 500 multiple times. So there has been no trend, so would avoid. The only one which out of these names which has been a clear trend is Mahanagar Gas, but that has also seen a lot of volatility. So on dips, Mahanagar Gas would be still okay, but avoid an IGL Gujarat Gas purely for the reasons of no great as such.
I don't think we have chatted about the telecom sector, right? Any view on this Bharti Hexacom, the latest IPO which happened, and the kind of stock price move we've already seen, and Vodafone IPO? Are you betting on that?
That's to me, Anisha?
Yes, Gurmeet, the question is to you.
Yeah. So we've been very constructive on Bharti for a while now. I think the stock has seen good re-rating as well. Industry leading ARPUs now. Their digital portfolio is doing well. If you see last few quarters, they've been adding almost 6 to 7 million in 4G, 5G. So almost now in the overall consumer mix, 75% is 4G, 5G. In a lot of circles, especially the 7 circles, the 5G additions have been pretty solid. I also think that there is an opportunity in home broadband business. So if you see, for example, Geo platform currently is valued about $150 billion. As per the market where the deal making happens, Bharti can't be at 50%. It actually crossed ICICI Bank market cap. I think it's headed higher. Vodafone, I think the amount is too low, and I'm a little concerned on the equity dilution. And if government dues get converted to equity, probably a government owning it at almost 80%. So while I think it removes some doubt on it being a going concern, I don't know how much of value is there for the stakeholders in the current debt. And they right now need to still add 5G and spend more on network expansion as well, add more sites. So I would prefer Bharti, and I think in that space, very constructive on Bharti, one of our large holdings, top holdings in the large cap space.
So Bharti Airtel is something that Gurmeet really likes. For phone, as is the concern for rest of the people as well, equity dilution. But what's the answer that the management has to this question of equity dilution as well as the way forward for the company? Listen into what Vodafone Idea CEO told my colleague Ajay Sharma, and also a whole host of corporates joined us today, right from Ajay Dial to Brigade Enterprises as well as Talbros. Listen into those key takeaways as well.
If I were to say there are multiple answers for the telecom industry, and telecom is a complex operation, but if you ask me what is the reason why we continue to lose subscribers disproportionately, there's only one reason: lack of 4G coverage, and it's quite significant, and because we could not invest after the AGR judgment. Now, the point is that as we make these investments today, if you will see, our share of customer acquisitions is already higher than our customer market share, which is something which most people don't realize, which means we are able to attract customers without difficulty. Wherever we have a service, and a coverage of 4G coverage, customers are coming to us. Our problem is where we don't have coverage. Either if a 2G subscriber wants to upgrade to 4G, the only choice with them is to move to competition. Also, subscribers like yourself who are very happy with our services in Bombay, but you travel to parts of the country where there's no 4G coverage, then you would also think about changing your service provider.
So this year, as a business, we focused on getting our growth at minimal cost. Top line grew about 23% for full year and 6% plus for fourth quarter, and costs have been very well controlled. So this is what has overall led to margin expansion. And for next full year, while we don't issue any formal guidance, we think we should be above 25% plus margin. So despite whatever is the health of SMEs in the ecosystem, we are targeting that for next full year, we should be growing at 15% plus for top line.
Coming year, we have said we are at least looking to launch another healthy pipeline of at least 10 to 12 million square feet. We expect all the segments to grow in parallel to each other, and we believe that this trend will continue. We will continue to build more office tech parks. I think we said we will to launch at least 6 million square feet of office. I've also mentioned earlier that we will be launching 5 hotels sometime this year.
We are expecting a growth of 18-20% in our businesses altogether, and some businesses will be more than 20%, some will be 18%, some will be 15%. So average 18-20% growth we are looking at the business. Of course, the more orders from the European countries we are getting in EV because they are trying to launch the vehicles in 25 and 26. And from domestic front also we are getting not very big orders, but small order for EV. Target is our total top line of 2,000 crore, 12% will be EV business, more than 12% will be EV business. Target by 7 FI.
Those were the newsmakers on ET. On that note, we let you go, Gurmeet. Thanks so much for making time and speaking with us today. So, recovery, we are back above 22,000 for what it's worth. A 50.6 recovery from the lows of the day is what we have seen for now. Let's see where we go from here on. But quickly, let's take the BDSC trades.
So, still go with 2 buy calls. The first one is on Aurobindo Pharma. That stock is looking attractive as a breakout. So, would suggest a buy with 1150 as a target. Stop loss could be kept at 100. And PVR Inox is the other name which is coming out of a major correction. It's a consolidation. So, showing a lot of strength today. Would we expect this to be a start of a decent uptrend for the stock? 1480 as a target and stop loss at 1400.
Okay, Naresh, what about you?
So that would be a buy first on ICICI, which is close to a new all-time high. Stop loss at 1700, target price of 780. Second is a buy on Compton Consumer, showing good relative strength here. Stop loss 95, target price of 310.
So those are the top recommendations coming in. Thank you guys, Kunal as well as Naresh, for joining us today.
If you like this video, then like, share and subscribe to ET Now.